clearly all the way up. So look at this, right? Look at this. Two very similar concepts, right? This one, yeah, I'm not looking at the move down. We're looking at accumulation near a high, spike and fail, right? Today, we're not looking at accumulation near the high at all. Very different, but very similar. This is lethargically pulling back, right? Should this low have held and we just accumulate in here, now we can think of the possibility of spiking up and failing, right? Instead, we're looking at this to lead to a rejection. We don't know whereabouts. We allow price to tell us that. How do we allow price to tell us that? Failure. Failure. Right? And in my infinite wisdom, getting long in here, second entry here, I was looking at taking this high. The expectation was potentially to break this, but should we have traded in here and then gone lower, I would have definitely been interested in a major long around here. Instead, it largely left without me. Now, we were discussing multiple moves today, which I'll go over in this review. The main one is that when we have a breakout, and we categorize a successful breakout by the respect of the SNDR that does it. This SNDR holds, we go higher, period. Right? That means that if this SNDR holds and it comes up into here, we're not looking short at all. Could we have taken a short trade into here and made some money? Yeah. Yeah, we could have. Right? We look at this area right underneath our key area of interest, and we're analyzing the risk of going long. Why are we only analyzing the risk of going long? Advanced, those of you guys that are advanced can look at something like this for a movement back down potentially. There's a little bit of an imbalance sweep in here, fair enough. But what we're looking at is if we want to get long, this is the area to do it. We already had a long trade out of the midpoint of the last swing. Bang. Some of you guys caught that this morning. Excellent. Some of you guys grabbed trades in here. Excellent. Some of you guys, like drama, absolutely destroyed it before the 8:30 news. And you guys killed Asia. Awesome. A wide range of a buffet of ability to make money in here. Cool. So this movement down, inducement, cool. Now the possibility of trading into here and then failing. We know that reversals come out of higher time frames. So any short, even this one, if that one had provided a movement back down into here, we would have been looking at as a retracement because our trend is high. Higher time frame trend is up. Okay. So now as we're trading up, this was a little bit tricky. But you'll find that we have our lower time frame market structure that goes up here, right? So we break out of this zone, we tap back in. And now what we use the 1 minute for, we're not using it for major structure. We're using the 1 minute to tell us what the 15 minute is doing. That's our time frame. And then the 1 minute refines our risk. It gives us our entry. The only thing we are on the 1 minute for is looking for an entry, right? If we know what's going up, getting involved becomes a lot easier versus looking at the 1 minute chart, not knowing if it's going up or down. And now we're kind of like, well, you know, it just failed below here. Maybe I'm short on this candle for this collapse. And then you got your face wrecked, right? The 1 minute is our entry time frame. That's it, right? So we know we're pointing upwards. We've got a protected low here, which we identified this morning. I'll go over that really quick. As we're trading up, this is our last structural bullish candle. This one did not close over it. This one did, making this our last structural bullish candle. This down move, right, became an order block for the ICT bros that then got liquidated going long in here, right? This became a swing. That's important because that's not even attached there because of the magnet. There you are. No body closure. Very important. Why? Because if we sweep a protected low, if we do sweep it, we're looking for a trade back into the range. Or sorry, if we don't sweep it and we close here, we might look at some sort of trade into here, which would then take us back up into the range for further down move. We don't get that. We got a sweep, which tells us we're likely going above this high, because this high is now weak, right? Not to mention we don't have structure, right? So the key with this is that retail and everybody else, all this here, they're looking at this, they're going long, they're hoping to make back their losses from this morning. They're looking at these equal lows, they're going long in here, hoping to make money back from this morning. Oh, maybe this low. Okay, look at that. We got strong buying pressure. Here we go, lads. Nothing taken. Nothing taken. Everything not part of structure was taken. The only viable long would have been below this candle here. That low at 473. This one actually went 2 ticks. 2 ticks below it, right? So hypothetically, if you're in here, do you get your 10 points? Yes, you do. Right? Not something I would have taken. Not something I would have taken. I'm looking for whereabouts the objective of this is, and then looking for failure, right? The conservative trade is not the sweep. That's an aggressive one. Also viable. Where's our conservative trade? Our conservative trade is the understanding that inside this move, the area that was responsible, where the market actually made a decision, was here. This is your last, well, for one, it stands out in the chart. For two, it's the last area where the market made a decision to continue lower. Right? Don't consider this. Why? Because that provided nothing. All it did was sweep liquidity. So why is that important? It's important because if we consider this an SNDR, then we have an SNDR here that breaks it. Right? The ICT bros will see this order block, and yet they got wrecked using this one over here. I'm sure there's some reason for that, but in reality, you have to have context and narrative, right? And then we've got about 4 different models in the room that use this area and these sweeps to get involved in, right? There's probably, before Bats jumps in and yells at me. Yeah, see, there's your OTE, right? How many different disciplines have an area there? Which then does what? Takes out the high that failed to make a new low. Goodbye. So pairing everything in, the SNDR that breaks into the SNDR, closure above, cool, failure, what do we expect now? We expect a retracement. That retracement goes back into the area of interest. Couple of sweeps and we're away. This was the #1 trade of the day. That was the #1. The conservative, you could have definitely gotten a long out of here, right? There was longs to be taken in here. I think I took a few on stream for you guys. I really liked this movement back into the midpoint of here, and then obviously the low here. Right? Everybody understand? Not to mention, there's many reasons for this high we would expect to be taken. Not the least of which is that it's a higher time frame SNDR, our 4-hour SNDR. What are the chances that we go into it and just rocket out of it without trading up into it? Highly unlikely. Highly unlikely. And then what do? We make a new high. We sort of make a little bit of structure on the way down. And inside of the structure, we have two major points of interest. We have this fractal here. Why is that one important? That fractal broke above, signaling the end of the downtrend. As if we couldn't have already told by this sweep into here and the reaction that came from the midpoint of this zone. Whereabouts you might look at? How about the intermediate time frame SNDR that just broke structure in the form of an internal swing? I don't have the magnet on, so you're going to have to bear with me. Right? Beautiful little pattern there to get long. And then what do we got? Another fractal here. You could argue this one, right underneath the high. This one is equally viable. You got your bear candle there. Right? You see they were both actually traded into by the market because computers will notice them both. Personally, I would look at the last movement where the market decided to shove through. This one, it's already kind of in an uptrend. I don't really put a lot of significance into that if I had to choose between the two of them. Yeah, so for the recording, I didn't get what I wanted on that to take it. That's fine, right? For example, if you were looking long on this movement in and you get this candle with a long wick, obviously this is something we would like, and yet we don't get a sweep or anything of it. That's very challenging. And that's cool, right? That discipline and that I need to see A, B, and C or I'm not involved, period. Right? There were many times, many trades today where we got exactly what we wanted. There's been a lot of days, especially recently with the higher time frame price action, where we do not get what we want. And that's frustrating, but it also pays us in the future when these trades don't work out, right? And we typically don't see when they don't work out, don't we? We only see the ones that we miss. We don't look at the ones that would have given us losses that we stayed out of. So, the only short opportunity, in my opinion, today, well, that's not true. Not the only short at all, right? We see here accumulation, right? We trade higher. We look like we fail here, trade back in and go. And then what does that provide? Multi-time frame analysis video. Hopefully you guys are watching it. What is this? Bang, another short opportunity. Time of day, not my cup of tea. Does price trade differently? No, it does not, right? But in here, we have lethargic movement. That will lead to a rejection, but until it does, we have to analyze using structure whereabouts the objective of this is going to trade into. What do we have? We have the midpoint of a zone. Cool. Is that a zone? Not really, right? But it's certainly, no, it's not. No, it's not a zone, right? It's an area of interest for sure. There's a lot of volume in here. The midpoint of it for sure. Right? But lots of internal movement in here, but no. We hadn't traded down back to this midpoint. That would have been an area I would have been interested in. 510. In fact, I did call that out. If it would have presented itself at 509, sweeping this area of interest, that would have been an A+ trade for me. Did not get there. So I left the desk. Any questions, comments, concerns? Did you guys like the magnets today? It's my secret trick. I don't show you guys that often, but that's how you do it. That's how the pros do it, right? It's got to be a big one too, right? These guys mess around with these magnets. It's got to be a big one. It's got to be a big one. Right? Show us a magnet example. What were we doing? We were looking for the high, weren't we? Wasn't it in here? Right? It was in here, but it was kind of chopping around. So Tom and I decided to get the big magnet out and just pull the price up. And then it can come down. If it doesn't cover your screen. Yeah, no doubt it doesn't cover your screen. What do we got? Here, you guys will hear it here first. It's coming for that high. See? Isn't this how the furrows do it? So the furrows do it. Now, I did want to tell you guys something else because I got off the phone with Michael. You guys know him as ICT. We're actually close friends. But before you hear from anybody else, the secret 38-minute fair value gap trade. Right? So this right here was a huge swing for us today because it tapped into the secret level. All right? So when you see these 38-minute fair value gaps, you guys got to make sure that you're not trading against them, period. All right? Look how many of them were formed here. That's the market telling you you gotta stay with us. I love you guys. Love you guys. With Dodgy, yeah, no doubt. No doubt. Last thing before the review, and I'll answer some questions. All right, sorry, Bats. Your secrets. I don't know what you're talking about, man. I'm a closet ICT guy. My secrets. These days, we kind of get so much information and so much stuff that is thrown at you by either me or your own analysis and trading or trade management. You know, all of it. There's so much that we tend to look at, and I use this in quotes, the basics, right, of our methodology, which is essentially formed around SNDR. And that's important because it bears us to really understand the power of the SNDR and the continuation SNDR. For days like today, where that alone keeps you on the right side of the trend the entire day. Yes, we can use protected highs and lows, right? You got protected low, protected low, protected low, protected low, protected low, whatever. Onward and onward and onward. People will look at fake flips and whatnot, right? So, for example, I don't know if people actually looked at that, but technically that wasn't. The protected low was here and then here after it finally broke. But the better way to do that is actually to look at the SNDR itself on your 15-minute. Right? So forget everything else in here. This gives us nothing. right? People are trying to analyze and hear what way it's going. Even this ended up sweeping and failing, right? We need to zoom out. Remember our advanced SNDR videos. You could find a short in here, sure, but we're still looking at that as a retracement until we get something that's broken. And the probability is much higher to take longs out of all of this until you're at a point where you're like, you know what? I took 3 losses in a row and I'm down whatever else. Cool. But I've been here before, or I know full well that I'm just going to get back to basics and focus because I can make that plus tomorrow or later on today or whatever else, right? Like, well, maybe Tom doesn't take losses, but, you know, I certainly take losses in trading. I don't let them affect me. It used to. It used to for sure. Right? I couldn't handle it. I couldn't handle being wrong. Or the emotions that would flood in with everything that I want to achieve. But ironically, everything you want to achieve is based around how you deal with those losses. It's not based around your wins. And you guys are, many of you are starting to truly understand that. There's one thing in your trading or your life that you're bringing to the trading desk that is continuing to impede your progress. Meditate on it, find it, eliminate it or mitigate it, and you'll know, similarly to you know in the market, Tom and I have talked about this a lot this week, when the top is in, whether it's short term or long term, depending on the time frame, of course, you don't have to guess. You will know. When the bottom is in, you will know. Certainly the top. You'll know. You'll know, you'll know, you'll know. Right? Is this the top? No. There won't be any questions when they start to spool off. So I implore you to find that and reach the next level. Okay, I'm going to let you lads go. And I will catch you guys for the end of the weekday tomorrow. Appreciate you guys. We'll see you tomorrow.